Hey, good morning, everybody. Happy Monday to you all. Wrapping up the month of August. We're heading back to school, and hopefully, we still have quite a bit of summer months left, but we'll see what the weather brings us coming up. So, hey, just want to kind of jump in our quick regular Monday update. And Jeannie waits till now to start a phone call in the other room, but hey, that's all right. Welcome to the office life. So, speaking of office life, I got asked the other day, is like, why are you always in a hat and t-shirt on these things? Should you get dressed up more? And it's easy. Monday mornings, it's kind of like our weekends. We spend so much time running around over the weekends that this is our office time, getting caught up on paperwork, accepted offers, dealing with listings and so forth. So it's business casual on Mondays in here. So there you go. So let's jump into the regular stuff. So the usual question I start off with: Hey Jeff, how's the market? All right, here we go. The lockbox activity report for Oregon. This is every time Jeannie and I unlock a door, show a house, registers as a hit on these charts. In the Portland metro area, week over week, we are up almost 2%. So we're kind of plugging right along. If you look kind of at the far left end of that graph, it kind of leads you to believe Oregon is more or less on track for where we were last year. So coronavirus as a short-lived blip. You see the V in the graph there in the March-April timeframe, and then we bounced back. So it definitely has had an effect on the market on the whole year average, right? Because we had some periods of time there where we weren't showing as many houses, activity's down. So you're going to see stats all about, it's big hits to the market, blah, blah, blah. And for a period of time, sure. But I can tell you it's a very healthy market going on right now. Borderline neurotic at times because it's highly competitive at a lot of price points. So meanwhile, across the bridge, since we are working in Oregon and Washington, I am dual licensed, so I work on the Washington side as well. They're a little bit down compared to last week, a couple points down. They're lagging behind last year's trend line, but it's cruising right along more or less just fine. It's not surprising to see a slowdown. August tends to have a little bit of a lull going on because people realize, hey, I've got just a few weeks left of summer vacation with my kids, last minute camping trips. Let's go to the beach. Let's go do something before school starts. Granted, this school year starting is going to be a little bit different because just send the kids to their rooms, I guess, for school. And but still, so to see that down a little bit compared to last week, it's fine. But I think the bigger story here is Washington at this point in time compared to this time last year is off a little bit. So not dramatically, but they are down a bit. So what else is going on in the market? I like to talk about articles that I see that I know will be attention getters, and then there's some that are just kind of national based. I kind of frown on those, but I see this all the time, whether it's having discussions with friends, clients, or just kind of reading things online. People talking about, well, hey, there's a crash coming. It's a bubble. It's a bust. Hey, just look at what's happening in San Francisco, and why San Francisco has become the poster child for this. I don't know. Probably because you have places like Twitter and other places have said that they're going to shift to full-time, complete remote working for all their employees. They just recognize they don't need to pay for that expensive office space. They want to be anchored on the West Coast just for the cool factor, but they don't want to pay the rents. So you start seeing these articles kind of popping out now that a quarter of all San Francisco homes are dropping their prices, the highest rate on record. The sky is falling. We're all doomed. Don't own a house. This is the takeaway. The other thing that I'll tell you typically happens with articles like this, the headlines are great, they're sensational, they're shocking, and nobody's going to read the article. You're going to hear that and go, here it comes. San Francisco's tanking, major city on the West Coast. We're all going to tank. It's just a matter of time. Now, that said, I read these things, and yeah, I'll read the article. I'll read the details. I kind of like to take a deeper dive on things. So as you read through this article, and this was something that kind of came out, I believe, through Redfin. They wanted to show, hey, here's where you see the prices are starting to drop off. Right? You see the red line. You see it tanking it down 24%. Well, it's 24% off of what's almost a 25% increase in home prices. So home prices have been on an absolute gargantuan tear in San Francisco here over the past few months. So what you're seeing is it's cooling. So yeah, they're not going to be 24% growth in home values year over year for a sustained basis. That's craziness. So the fact that they're coming down now absolutely makes perfect sense. And if you look compared to prior years, it's still a fantastic place if you're a homeowner. If you're buying, it's still expensive and it sucks, but that's life in the Bay Area. So they went through too. They showed a table of data where they wanted to kind of just visualize. San Francisco's 24% of their active listings have price drops and activity happening within them. That's all their listings. So that's fine. That stat doesn't really mean anything at face value, right? Other than a quarter of the homes on the market have been getting haircuts. All right, people are finding religion on pricing. You get too aggressive, the house is not that great. Who knows? But the biggest thing that you look at is the number to the far right. They've had almost a 13% increase in homes that are dropping the prices. So that's your story, right? That's if you go back to that last chart, the line graph, that's that beginning of kind of that downward dive of people are starting to kind of shave prices off because 24% year over year is absolutely crazy. So people are making the adjustments. So then I kind of cropped the report a little bit. Then let's show the two West Coast cities that we really care about, Seattle and Portland. So Seattle has basically a third of theirs, and we're about 29% of ours have homes with negative price adjustments, right? So price cuts. Compared to same time last year, Seattle has 2% fewer of them. Portland has 3.5% fewer of them, meaning our prices are still ticking up year over year. And this is not going to be a function of, yes, but there's a lag, and Portland lags the market, and some things, yes, we do nationally, but compared to San Francisco, no. This is just San Francisco got crazy. Portland a few years ago, we had our crazy chapter. Seattle, just within the last few years, definitely had their crazy chapter, and they've kind of cooled off a little bit. So it's just sort of that natural ebbing and flowing that you're seeing. But I think the takeaway here is you read these shocking articles about what's happening in San Francisco, and it doesn't correlate to what's happening here on the West Coast. I would also submit that, again, I've said this many times, look on up and down the West Coast. We are the last major affordable West Coast city in the United States. So keep our jobs intact. If we can get some more companies coming in, we already know the people are coming, and we know we don't have any housing inventory, right? We're at 1.2 months last month. Prices have nowhere to go but up. There's just nothing. Maybe here's where I insert my little meme of there's nothing that's going to create negative pricing pressure on Portland real estate anytime soon. You convince me otherwise, because I simply don't see it. So that's a big article number one. This one came out the other day, and I thought it was interesting. Don't be fooled by the mortgage rate news. And kind of the big takeaway is there's a lot of articles coming out saying, hey, rates are higher than they were last week. Rates are plummeting, right? Feds are making some big action that's going to plummet the rates. So a couple of things. The rates, basically, that misconception number one, rates are lower today than they were yesterday. Well, so when they do these mortgage rate averages, apparently they're looking at Monday, Tuesdays, and Wednesdays of each week. They just ignore Thursdays and Fridays. So you'll typically, as the article talks about, you'll see big reactions in the latter part of the week because you're outside of the testing parameters, if you will. So take your mortgage news with a grain of salt. And then again, kind of the Feds have made something big. Well, the Feds don't drive mortgage rates, right? They're going to impact your overnight trading rates, which over time, kind of trickles down and ultimately has some impact on mortgage rates, but it's not going to be one for one. So take all that with a grain of salt. If you ever have any questions about mortgage rates, predictions, trends, let us know. We've got two good lending partners we work with quite a bit. Both very much have their finger on the pulse. One puts out a really good, highly technical, very data nerd central recap every Friday or Monday. They're great articles. I love reading them. If you're a data nerd like me, they're fantastic. So sorry, Riley. Yeah, you're kind of a data nerd, but brothers in solidarity, man. I love them. Okay. We talk about this a lot, right? Especially here in Portland. Pending home sales are up 6% in July, right? So this is a national article, so I hate them, but hey, whatever. So their pending home sales are up 7%. We're up our pending numbers were up 17% or 24%. We're up dramatically higher. So it just means mathematically you have places where it's significantly lower. You got places where maybe the pending sales are down because it's just places nobody wants to live. So pending sales are up, right? So real estate across the nation on average is hot. There's not enough. Inventory shortage on a whole is the same thing as Portland. We're way down. So I share that to set the stage with kind of the next article then of if we're all down, then, is Portland really that unique and that special? So let's talk about where flippers are still working, right? And we can talk nationally, but who cares? We talk about what's happening in Dallas or Houston or Texas. Who cares? It doesn't matter to us, right? So if you look up and down kind of the West Coast, and let's just go with kind of the western half, western third of the country, right? So if you want to start with Denver, or if you want to kind of just then maybe go northwest, let's go California, Oregon, Washington, Idaho, Nevada. Where are home flippers still working and still productive, right? So if you look, say, at California, all their little dots in their key cities are all orange and red, meaning flipping is just not really kind of a thing, right? It's barely break even. It's down. It's not great. Seattle's kind of stalled. Again, prices got driven up so high in Seattle, it's hard to use. They're on their rebound period, right? They're not on their upward growth. The one green dot on the West Coast, Portland, Oregon. So why are flippers still going to be working here? Because we don't have inventory. We do have people who want to come here. And we are, again, the last low price major West Coast city in the United States. So there's still room. It's not $800,000 price points. We did crest 500 for the first time last month. But still, all things considered, reasonably affordable. So there's room for growth. Mortgage rates are down. People want to be here. So flippers are alive and well. So it's good and bad, right? If you got a tired house and you want to sell it, there are buyers for it. And then of course, if you want to buy what looks to be a brand new pretty house, great, inspect it, because flips can be fine. Flips make me nervous inherently, but if you have a good home inspector, you should be fine. It just also means too that you're going to have that much more pressure as you're looking to go buy, because you're going to have flippers who are going to be picking up kind of the more lower end, cosmetic fixed need homes. So it makes that low end tough. I can assure you the lower end price point homes it's a brutal market right now. So everybody keeps coming back to it's our highest home sales since 2005. Can it last? And again, it's a national article, so it's stupid. It just doesn't mean anything for us. But definitely you see kind of in the bottom paragraph, that article does reference the V-shaped recovery. Multiple graphs I've already shown today have shown the V. I show them all the time for Portland. Definitely is the V. We have recovered. And again, we have the urban growth boundary. We've got record low mortgage rates. We have no existing inventory. We have a 10-year tranche after the Great Recession, with homes not being constructed on the amount of pace that we need just to sustain natural growth within the Oregon area, let alone then census migrations and on and on. There's not enough homes. So can it last? Yeah, by definition, I think yes, it can, until you have something that dramatically skews some of those numbers. I think once people get comfortable or more comfortable with coronavirus, you'll have more listings will start to hit the market. I think we still have some people who are weary of either having strangers come through their home during a pandemic, or they've just looked at, I want to sell, but God, what am I going to buy? It's so tough and competitive, and it is. But that's where I would caution any of our clients, if that's your only concern, then let's talk about strategies. Let's talk about options. Let's talk about how we go about helping our clients do this, because we help our clients with this pretty regularly, of getting them comfortable with, making sure you're going to be able to find a house if you list your home. Here's what we do. Here's how you navigate the waters. And here's kind of some handful of things that Jeannie and I do that may be a little bit different from a lot of other people, but it's successful. So just, again, make sure you're talking to the right team of people. And then lastly, this one's a little bit more ominous. But the Fed recently met, as it basically said, with everything going on, they're not going to put any kind of controls in place to try to curb inflationary pressures. They're okay with inflation running a little bit hotter, because the only way they cool inflation is by pushing rates. Push the rates, you slow the economy, you slow the price creep. But this is not the time to be doing that. And apparently it was a unanimous decision we're going to run hot, we're going to run hot. So certain things are going to get more expensive. The question now becomes what? Chicken, I guess, in the picture. I don't know. Who knows? Hopefully not. But certainly some basic staples just for everyday living will become more expensive. The things that matter as it relates to this broadcast on this Facebook page is, and we're already seeing a little bit, soft lumber. Do we have increased price pressures on soft lumber, any type of other kind of commodity, steel, copper, things like that? Why? Because it goes into your houses to build them. So now your new construction homes, and I think I shared a graph on, or a article on this last week, that with soft lumber prices going up, your average new construction house was like $15,000 more expensive than it was last year, just because of the increased price of the products. So what does that mean? The house next door to you is going up as a brand new construction, and you're next door 10 years older. That house can be 15 grand more expensive just because it's newly built. So that home is worth more. Guess what it just did to the value of your home? You're going to be up as well. Probably not 15, but you're going to be up higher, because that's just how the comparative neighborhoods are going to work. So it's good and bad. If you're buying, it's going to be more expensive. If you're selling, hooray, you made more money. So there you go. That's your mortgage or your market update for the week. A little bit of a quieter week, but that's okay. If you have any other questions, specifically what's going on in the market, what's going on in your neighborhood, let us know. We love talking about this stuff. Otherwise, have a great week. Enjoy the tail end of your summer vacation with your kids, and be safe. We'll talk to you soon.